guys. Hi everyone. Welcome back to my channel. So today we are driving into the world of forex trading, specifically focusing on the GBPJPY. As we navigate the post-lockdown market, I'm excited to share my insights on why GBPJPY is a preferred pair for many traders right now. The GBP pair, GBPJPY, it offers unique opportunities due to its volatility and liquidity, of course. Yeah. I like how volatile GBPJPY is, and so it creates a lot of opportunities for us, especially traders in the forex market business. So, mm, following the UK's economic recovery and Japan's monetary policy, this is one of the best pairs that has become increasingly attractive to traders. In this video, we'll explore the current market trends, the key factors influencing the pair, specifically on technical analysis. I'll touch everything from being a swing trader, an intraday trader, a day trader, and all that. So please be keen on this episode. I'm going to touch on those areas. And another thing that I normally do check on is the COT report. It's called the Commitment of Traders Report. Over some time now, we have not had the reports, but we are hoping that we'll have reports from the US as soon as we resume. So I hope you find this video valuable and insightful to enhance your trading journey. So let's get started and explore the world of GBPJPY. Let me start with scalpers. Let me start with scalpers. Whatever. Let me start by saying this. Yeah. So whatever kind of a trader you are, you must, and this is a must. You must do a top-down analysis on any chart that comes across your eyes. Anything that is presented in front of you in form of a chart regarding anything, any instrument that you want to trade, you must do a top-down analysis. What do I mean by a top-down analysis? Number one, you have to look at where institutional traders are, where big companies are, where big traders are. You have to look at the charts in terms of you can start with the monthly charts. You want to see what is the monthly saying, regardless of whether you want to scalp, you want to do whatever you want to do in these charts, whether you want to do intraday, whether you want to do swings, whether you want to do scalps. Now you have to start from the monthly chart. Sometimes I also recommend starting from the 3 month chart because there are some times that you won't understand the monthly chart unless you check out the month. Like for example, right now, I like trading the swing, the legs, yeah, the legs. So normally I look at the most recent price leg that has happened in the market, and from that I'll be in a position to tell the direction of the market. For example, right now you can see this is a 3 month chart. Um, the most recent price leg that happened was definitely here. You can see this one, and this one. Then later on we form this leg over here, but it's not yet complete. So if in case this month closes uh, uh, and then we have the next month closing below this high, below we are on October, below October's high, so we expect that to be the next price swing. Otherwise, currently we are working with this pricing, this one and this one. So this being the high, this being the low of the of the price leg. So that is what we're working with. So you can see we are currently trending at the rejection block that is created by the 3 months uh, 3 months price leg. So we're not gonna measure on that. That is just showing us that in an area of resistance, just in case the market wants to reverse. Remember, uh, this is a 50-50 business. So you look at probabilities, which direction has higher probabilities according to what is presented in the market. So it's up to you to look at the probabilities that are presented by the market. So what do? You come here to the now according to the 3 months, you can see we are on the resistance zone. So we expect the market to be pushed downwards. So looking for sales in these conditions, according to the 3 month chart, is quite healthy. Let us look at the 1 month chart and see what's happening in there. So remember this line. This line I drew. This was the this was the 3 months rejection block. Uh, so we expect that the area above that to be a resistance zone. So yeah, that's where we are. So the current price leg that we are trading for the monthly chart is mhm, let me point it out. Uh, we had a swing high here and we had a swing low here. That was confirmed by this, but it wasn't. You can say that mhm, you can say that the price leg for the monthly chart is not yet formed. We don't yet have a current price leg that we are working with because this is already traded. This is already traded. So we can't just say that we have one that is not that we are within one. So we can ignore the monthly chart and work with the 3 month chart. When we move to the weekly chart, uh, let's move to the weekly chart. Now, in the weekly chart, we have a current price level. What is happening in this market? You can see um, we have this swing low over here. We have another swing high over here. So we are working with this price leg. So in this price leg, we can identify what we call PDRAs. Those guys who have done ICT, you understand what PDRAs are. So we are going to look at discount and premium PDRAs. So for the discount premium arrays, we have this order block over here that is raising around 200 449, and then we have if you divide this section by 2, let me just divide it by 2, we see where we are resting. Let me use the Fibonacci. If we move our cursor from the highest level to the lowest level, we have this area over here. So anything appearing below that is a discount PDRA. Anything appearing above that is a premium PDRA. So my red lines denotes that we should sell, and that's a premium PDRA. So below anything below 0.5 is a discount PDRA. Now we have this fair value gap resting below here. So we expect when price comes back there, it should be pushed up. And then we have this rejection block over there. So expect when price comes above that, it should be pushed down. And it is pushed down with a formula, not just being pushed down. So there are things we look at. Yeah, let me take it back. So premium PDRAs, we have this rejection block. So you can see the price is already above that. So and this is also a rejection block. We can talk about the high being a rejection block, but let's mainly focus on this rejection block because it's official. That's a it's a rejection block, and it's a premium array. So sorry, let me take it back. what I want to delete is this Fibonacci. So now remember, the price leg was formed uh, at the closure on Friday, on the closure of this week, from Monday 13th. On Friday, the closure of that week, the closing of that week, we formed this price leg. So anything above that at the opening of this new week, the week we are currently on, we are going to look for sell setup. So normally, if you find a PDRA on a weekly chart, you drop down to the 4-hour chart to look for entries. So remember, uh, we, we we are supposed to look for entries from uh, Monday, or from, remember I'm using UTC minus 4. So for here it will denote as on Sunday from 1700. What are we going to look for? We are going to look for that candlestick. You remember the candlestick I was talking about? Yeah, the 4-hour one. And then we find it here. You see? We find it here. Oh, there. So another thing we are gonna do after we identify that one, we go to the 15 minutes chart. Remember, the nearest PDRA for scalpers, the nearest area of support is this red line over here. Is this red line over here. So what do we do? This one appeared at 1700, the 4-hour candlestick that was made at 1700 on Tuesday 21st. You can see it doesn't have a wick on the lower side. It has a wick on the opening. So we're going to extend a line over there, and once the price comes back there during a kill zone, we are going to sell. So what we do when we have the 4-hour, can you look at this candlestick? I want you to look at it. This one here, this one here. And please, I'm using forex.com, so make sure you're only using forex.com, because that is where I've practiced this strategy on, and I don't want to tell you to go to any other that I've not used. So you may look at other brokers and you find that it has a wick on the lower side. So this one is specifically for forex.com users. So we come back here. So at 1 a.m. on Wednesday, that is yesterday, we go to the 15 minutes. And now it is 4-hour chart, so we look for entries in the 15 minutes chart. We are not going to go below 15 minutes chart, at least 3 down time frames. So the third one, you look for entries. So from 01, remember, from 01, what are we looking for? We are looking for that candlestick in the 15 minutes chart. I want you to check on it. Here we go. Here we go. Here we are. So uh, I want you to look whether you can see the candlestick I was talking about. And what time is it? It is 01:45. That's when it was formed. Above what? Above this line. Let's look and see what's happened at that time. Uh, Check whether it was a good entry. So I don't know whether it's reading session now, but normally this is the start of the London Open. The start of the London Open. So you're going to take a short position. You see this candlestick over here. I don't know. Let it load. I don't know what's happening. Okay. I'm going to start with this, and let me delete that first. Let me delete her first. You see this candlestick over here? You see that? You see this smoke over here? That's your bread and butter. So anything above there, we're going to sell and wait for the reaction. Look, 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 look. I'm telling you guys, you like this. I'm sure nobody has taught this. This is mine. This is originally mine. So come there, put your trade there. Where do you expect your trade to go? The red line, remember? here. You know, at least remember we are risking only 30 pips. So from 243 to, it should give you at least 1 is to 3. That's the thing. At least 1 is to 3. At least 1 is to 3. Yeah, there you go. There you find this. So given the market the room to even come to this point, remember there is this fair value gap resting above here. This could also be tested. So give the market the room to react. Give the market the room to react. So what normally gives me the stop loss is my target, because I believe the market moves in algorithms. So what gives me the target and what gives me the stop loss is the target specifically. So, and especially when I see it is the stop loss is above a certain price action, above my entry. So I be comfortable with that, and especially if I see it is at most 1 is to 3, at least 1 is to 3. So this is a good entry. You can see this was at 2 on the dot. What was happening at 2 on the dot? We can check. Uh, those guys who trade news. Let me see what was happening at 2 on the dot. Forex Factory. Let's see. That was Wednesday. 2 on the dot. That's on 9 a.m. local time. So let's look at the forex time. What was happening on forex time? Uh, at 2. Let me see. Now this one represents the local time. This is New York time. I'm using New York time. Guys, this is not a complication, but I like working with the US time because this was 2 a.m. I mean 9 a.m. local time. Yeah, right. Yeah, 9 a.m. local time. It was exactly at 2 a.m. 9 a.m. local time. You can see it was exactly here 2 a.m. UTC minus 4. What was happening that time? Guys, we had GBP CPI. You can see this is how you can predict the market. This is how you can predict the news. It happened, it went down. Guys, look. If you wanted to do full margin, this is how news are traded. You see? This shit went down. Poop. Actually, this is the holy grail for trading news. I hope guys you find this one insightful, and yeah, remember this I told you is a zone that could be retested. If it was NFP, it would have pumped here, pa, and then dropped. I hope now you understand how to trade news and how to use my strategy to trade news, and that is it, guys. Uh, well, we're gonna share many and more of this. Please share this video and subscribe.